Good morning, everyone. It's Jared here from the Alpha Capital Group giving you a preview for the week ahead. I suppose over the weekend, if we just take a quick recap of kind of, I suppose, the fundamentals over the weekend, a lot of back and forth in terms of commentary from both the Russia and Ukrainian side early on. And I think towards the weekend or the latter part, we had positivity coming out from Putin. And then that was very, very quickly undone as the Ukrainian counterpart said that there was no progress in terms of talks. Now, we have seen kind of comments back and forth between ministers, defense ministers on both sides. If you were to believe everything that was said, you'd say that there's probably a slight breakthrough in progress. But of course, caution with any kind of downside narratives of market movements. I suppose, again, the Russia-Ukraine narrative should continue to dictate and dominate a lot of the movements, particularly in the short term this week. So trade that with a lot of caution. But from the US domestic-based perspective, the big discussion point this week will be the Fed. Okay, so Wednesday evening at 6 p.m., we have our FOMC meeting, which will set forth the near-term outlook by the Federal Open Market Committee in the United States regarding its current monetary policy. Now, I think it's locked in pretty much at the moment that there will be a 0.25% hike. Anything above 0.25% will be seen as hawkish outlook by the Fed and will be seen as bullish. Now, of course, bullish for the dollar and weaker for the indices. So just keep that potential narrative just in the back of your mind. Now, at the moment, with inflation at 7.9%, as we saw last week, will they try and push it higher? I suppose all eyes will be on the voters to see which way does it swing. So that will be the key, I suppose, fundamental element that we'll be kind of focusing on this week as obviously within the US markets. Now, I suppose if we very, very quickly turn to the economic calendar for the week ahead, today, fairly soft, not really too much happening, but tomorrow is kind of where things start heating up. So we have the RBA meeting minutes tonight. We have some UK data in the morning at 7 o'clock, and we have President Lagarde speech tomorrow at around about 3:15, 3:30. So there is the week starts to kind of heat up tomorrow. Now, I suppose if we turn to Wednesday, we do have our retail sales. We have CPI figures coming out of Canada, coming out of Canada 12:30. So of course, keep an eye on that. Particularly in terms of, we saw European inflation outlooks lately. We saw the US last week. We're keeping an eye on the UK as well. So it's broadly speaking, we have to look at all these markets collectively. Now, of course, as we alluded to there, the Fed interest rate decision and press conference will be at 6 on Wednesday evening. Note that is the earlier time due to the clocks in America going forward an hour. So it traditionally is 7:30, 7. So just bear that in mind. So all our data, all our opens, US session opens are an hour earlier this week to factor that into consideration with the clocks moving forward. If we move across to Thursday again continues to be a bumper day. We have Aussie data overnight, unemployment. We have HICP in Europe again on a Thursday morning with that to follow of the BOE interest rate on St. Patrick's Day. So of course that will be I suppose on Thursday. Traditionally speaking, Thursday is generally the busiest day of the week, so we'll have to keep that into consideration. With obviously as well the barrage of data coming out with the jobless claims and all the US data associated with it. So Wednesday and Thursday should be the two busiest days of the week. Now, of course, I suppose if you are looking at the last kind of 4 to 5 press conferences by the Fed, by Powell, Chair Powell, he has caused a lot of optimism in the markets. And generally speaking, if you look at the last 4 Wednesdays where there's been press conferences and interest rate meetings, you'll actually see where the markets have actually rallied in. So just keep that in your mindset that if he's going to try and play it down, keep the markets as happy as possible and try and get those prices rallying. So that's his kind of goal. So do keep an eye on that, particularly if the Q&As turns out to be quite mundane and he handles that well as well. All right. Friday then, to round off the week, a little bit less in terms of Friday's data, but we do have the BOJ interest rate meeting. Again, no change expected there, of course, within their longer term monetary policy. We do have some retail sales in America, and we do have Fed Bowman Speech to round out the week. So Wednesday and Thursday, Tuesday definitely kind of starts to kind of draw out the busier moves in the week. Wednesday and Thursday are 2 trading days fundamentally, and of course alluding to the fact that one, the markets are open that hour earlier, particularly for us European-based traders. Now, if we look at the markets into the week, we did see Friday tail off a little bit since our Zoom on our kind of our outlook recap video on Friday. We did see the price action sell off this 4,300 again back into this near term range. I would, if I was to say anything this week, I do believe that the markets would probably be, for the most part, consolidated into Wednesday. Okay, I do believe that the markets will probably be fairly flat today. I'm not expecting massive volatility today. Tomorrow we might see a little bit of that kick up, but I do reckon the markets will try and remain as flat into the FOMC meeting on Wednesday as possible. And then, of course, if Fed Chair Powell is bullish, then obviously we will hopefully see the indices rally. And if that turns to be a more hawkish outlook, we'll obviously see the markets turn lower. So obviously hawkish will be bad. They'll want to be dovish as possible to lead the stock markets higher. All right. So of course there S&Ps has come off that 4,300 back between 43 and 4,200 where we spent most of last week. Pretty much really from last kind of Tuesday, Wednesday into the close of the week, we've been back and forth between 42 and 4,300. NASDAQ again sold off a bit on Friday, particularly if we look at the shorter time frames, we can see that sell off from 13,800 back into this region here under 13,500. So again, markets fairly consolidated, not massively trending. We're kind of nearly moving. I suppose if you were to look at the price action since the beginning of March, we're literally in a kind of a more widespread consolidation. Yes, we've the highs, we've the lows and highs identified, but the price action now over the last week or so has been fairly consolidated. And that's obviously the same with the Dow Jones as well, been kind of hovering around this 33,000, 33,200 level, back and forth, a lot of consolidation. So I'm not really surprised at this. I do think the markets will try and remain, as I said, as flat and as even as possible into obviously Wednesday evening's FOMC meeting, which means then that the markets can remain, I suppose, more reactive to the volatility that may or may not arise on Wednesday. So rather than the markets trying to make a preemptive move now, pre-FOMC, and obviously being potentially caught on the wrong side of that move and then having to reprice that move in, they will probably try to remain as flat as possible and then try and arbitrage the move. So arbitrage is kind of the short-term volatility off of these fundamental events. So keep an eye on that. Now, of course, if we look at the commodities as well, commodities has trailed lower since those highs last week. So again, with the Russia, Ukraine lingering on, and I suppose discussions regarding talks in terms of peaceful resolution starting to come into the markets a little bit more, we're starting to see the commodities kind of tail off a little bit. So we've seen gold kind of come back to this 1960 level. I think short term, this is going to be a massive key level, I think, into this week to see whether the price action holds 1960. If we're breaking through 1960, we could very easily see another higher low scenario price action to pull back and find itself somewhere between 1900 and 1940 with very, very quick turnaround on that. And I suppose if you look at the price action there around 1920, wouldn't be that surprising if the price action broke through 1960. Again, with oil is now turning lower as well. If we go full screen for a second, we can see the oil price is now turning lower after those highs last Monday. We consolidated between kind of 105 and just under 115. The price action now is breaking through 105, and these wicks that has been alluded to last week is starting to kind of break down. So again, if the price action breaks down, I did mention it last week, this gap down here from the end of February at $95. So again, if the price action breaks down, we could well be seeing a potential gap close into this area, particularly if the fundamentals regarding Russia-Ukraine starts to turn a little bit more positive. Now, of course, with Russia-Ukraine, I do think you have to take some of these news narratives with a pinch of salt. There's been a lot of misinformation out there, and I suppose validity over sources. I know a lot of people trade news. Of course, I completely understand that, and I think it's important, but there's a big difference between trading the news and trading rumors. And I think what we're actually seeing is the markets being back and forth. And a lot of these comments aren't news. They're not news. They're just pure misinformation. So it is important to be able to separate that particularly from those who are trading the fundamental cause and effect events. Other than that, we are obviously seeing, as I said, oil pulling back. So this area here, obviously we have 100 nearer term. But obviously below that, then we have the area associated to around about 90.95, which is broken in through at this 92.50 gap close. So worth keeping an eye on that into the beginning part of the week. Now, of course, as long as the indices remain fairly consolidated, that's obviously seen as positivity for the markets, as we saw at the S&P, we saw in the NASDAQ, we saw in the Dow Jones. So see, as the indices remain fairly subdued and fairly consolidated, that alludes or allows for the commodities to potentially move lower, seeing a bit of a pullback in some of those extreme prices we've seen over the last few weeks. So until, I suppose, the narrative changes, keep an eye on that. And of course, we'll be back later this week, probably Friday, to recap the volatility Wednesday and Thursday. Okay. Now, I suppose if you want to look for fundamental articles, there's a lot. You're talking Clippinger, FX Street, Bloomberg, and there's a lot of very, very useful articles out there if you want to preview for the FOMC, and FX Street is obviously one of those as well. So a lot to look forward to for the week ahead. A lot of volatility, particularly Wednesday and Thursday. I think it's going to be a very, very important week. And it could really change the dynamic of the Fed if they were to potentially go to 0.5% hike rather than 0.25. That would systematically change how the markets are interpreting what the Fed is seeing for the current market conditions. So just please be aware of the volatility that can potentially occur on Wednesday evening. Until then, until Friday, everyone have a great trading week, and please utilize the risk management protocol.